everyone, and welcome to the program. This is your Business Morning, this Thursday, the 18th of October. I am boasting of We're live to you from the Nigeria financial epicenter, Lagos. Let's get today's business briefing right out there for you. Nigeria's federal cabinet has okayed President Buhari's $2.8 billion Eurobond offering plans to fund budget 2018 capital projects. That's part of the conclusions of the weekly Wednesday Federal Executive Council meeting. Transaction advisors or partners to the offering will get 374.618 million naira as fees, and approvals also given for the Ministry of Finance to get the monies relating to bills and expenses that will be incurred in relation to the Eurobond. Meantime, the FEC also, the FEC also okays the plan to raise $82.54 million to bridge the shortfall of the $500 million Eurobond that matured July 12, 2018. If you remember, Nigeria's paid down $500 million in July as part of the Eurobond that matured. That left a balance of $500 million. Now, that amount has a shortfall of that figure. That's a bit of $82.54 million. So the government is looking for $82.54 million to bridge that matured treasury bills, which has to be repaid to the investors. The approval was given at the cabinet meeting on Wednesday. Meantime, the Supreme Court yesterday orders the government to adjust the sharing of proceeds from crude oil sales anytime oil prices exceed $20 per barrel. The Attorney Generals of Rivers State, Bayelsa, and Akwa Ibom went to court last year, praying the court that their 13% derivation be paid upon oil price recovery. Meantime, the Senate has decried excessive and illegal charges imposed by banks on customers. The Senate yesterday decided that monthly ATM, or what you call automated teller machine maintenance charges and withdrawal charges of 65 naira on ATM transactions be suspended. The senators want those charges by the banks suspended with immediate effect, and the banks to reconfigure their ATMs to dispense up to 40,000 naira per transaction. Nigerians have been decrying the amount of money they can withdraw from ATM, and that could be sometimes as low as 10,000 naira as upper limit. Now, the National Assembly or the Senate wants those machines to be reconfigured, and that could allow all of us to take as much as 40,000 in a single transaction. And of course, that will reduce those ATM withdrawal charges. Meantime, Senate committees on banking, insurance, and other financial institutions have been asked to investigate and report to the plenary their findings on those issues, which were described as illegal imposition of excessive and other charges on bank customers. The Central Bank Chief, Godwin Emefiele, has also been asked to step forward to step into the National Assembly and explain why bank charges are in favor of commercial banks by the financial regulator. We're now in the earnings season, and Tier 1 listed lender GT Bank yesterday reported a strong earnings per share of 503 kobo against 436 kobo reported in the same period of 9 months ended September of last year. This lender is reporting a net profit of 142.2 billion naira. Impairment charges, loan impairment charges went down to 1.7 billion, and net fees and commission income went up nearly 11 billion naira. This is some of the earnings numbers we'll be chewing together today on the program, and of course analysts are swarming all over this already. We have quite a lot on the program for today. We have a fully loaded program. So let's get into the business of shipping, and we will be looking at what are the critical issues for Nigeria's shipping sector. But first, let's check in through with the market. Yesterday, the market went back one step, 0.87%. The Nigerian stock market, that is, a bit of sell down by investors, and then we saw the volume back down significantly from the previous Tuesday session. This is your midweek session looking at the index at 32,473.35. So the market was a bit weak by about 1%. If you look at the volume, 240.76 million ordinary shares for the third trading day of the week. The value was 3.65 billion naira, a little bit lower, about 1.5 billion lower than what we saw on Tuesday. And in terms of deals, also slightly lower, but at a threshold of 3,000 transactions. The five sectors which we track for you on a daily basis, 5 big sectors in the market. Okay, we saw those 4 in the red: the banks, the consumer goods, the industrial goods, and the oil and gas. The insurance, however, continue to hold on to the positive territory by about 1.5% on the day. A bit more on the markets, a bit more on the banking sector, and the earnings we have later on the show. But let's talk about those, the maritime sector, shipping to be more precise. Let's get a sense of where we are with some of the latest issues around the reforms and the charges, as well as the congestion at the ports. Let's get Frank Ojadi, who is a faculty member of the Lagos Business School and a maritime sector expert, to talk to us for a few minutes. This space is live to us from our studios in downtown Lagos, the Nigerian Stock Exchange. Mr. Ojadi, good morning. It's good to see you here on the program. So let's get Temple Ashaju, who is our business correspondent, also live at the Stock Exchange, to get this conversation up and running for us. Temple, good morning. It's good to have you on the show.
You talked about having Dr. Frank Ojadi on the program. Really good to have you, sir. Let's just get down into details now. Something brewing in the shipping sector right now. Yeah. Congestion is back. Charges and a couple of other issues. Bring us up to speed with these key concerns, as it were, sir.
Okay. What is interesting here is simply that way back before 2006, we had the government taking a very quick and decisive action to introduce the inland container depots, whereby you now have to move the containers in the terminal to this depot so clearing can take place there, and thereby reducing the congestion in the yard. But then, of course, when the concession then kicked in 2006, and you had the private operators coming into this game, they then quickly worked to put the yard in order and then put most of these terminals, particularly the container terminals, in order. And that immediately led to a complete elimination of the surcharge. Now, 2006 to 2018, which is essentially about how many years? It's,
6 to 18,
about 16 years. The congestion is back again. And that means simply that we've taken 1 step forward and then 2 steps backwards. So we need to deal with this. Now, the question is to try to understand exactly why this congestion is coming back. Exactly. The first company, shipping line that introduced that is the the French line. Now, apparently, it made a lot of uproar from the clearing agents, who in my view, are actually not those that should be protesting. It's really the shippers, that's the importers, that should really be protesting. But the truth of the matter is, let's try and get to the genesis of this. What is really clearly happening is simply that at the height of the gate congestion, which hit us way back in 2005, 6, and 7, and now coming to a head in 2015, 16, and 17, and now coming to a head in 2018, what became apparent was simply that the MPA directive to the shipping lines to open up depots where the empties could go to has largely been heeded. And then what that meant was simply that those containers are there, and then the shipping lines now need to make arrangements to take these containers into the terminal operator's yard, where they can now move onto the vessels. Now, that's coming at a very high cost And therefore, what I meant was simply that if the vessels then arrive and they are not able to pick up empties, then it's very likely that they're going to go away without empties. And that means you have to go look somewhere else to get more empties so you can then do your shipping from China on other places. So that naturally means that those managing these vessels and then arranging to have them shipped may also run into problem as to whether they are fully utilizing their capacities. So that's one clear thing.
Okay.
Now, one other interesting feature here is simply that it is through the terminal operators that they're going to get these empties back onto the vessels. Now, they have spaces for them, but quite often these spaces rapidly fill up so quickly because you have quite a lot of empties going back without much in them. So clearly, from the viewpoint of the shipping lines, that's part of the reason why they are introducing this surcharge. And like they pointed out, it is actually coming from the origin. So if you are a shipper in China and you intend to use a particular shipping line, they might tell you, sorry, Nigerian port, we're having problems with congestion. We don't know when we're going to land because of the limited space. We can't even meet up with our time windows for unloading and so on. So that could create a problem and some element of uncertainty. And to recover from that, the thing of surcharge is probably coming back again. Now, our concern here is that we do not want other shipping lines to follow suit and then introduce the same surcharge. Otherwise, it means simply we've come back to the same square in 2006. Question 8, the fallout from the management, or what I'll call the ad hoc management of the port congestion, is really leading to this. And that's perhaps part of the reason. There could be several explanations to this, but from the viewpoint of the shipping line, this is really what they are actually talking about. Yeah.
Okay, so let's look at the fact that you have charges. Yes, you have these surcharges you've talked about. You have different fees that have to be paid. I know that this is part of the concerns of a lot of importers, exporters. Yeah. Isn't there a possible window where all of those fee payments can be harmonized?
Well, in the first place, surcharge is not good enough. So if there's anything to be done, it has to really be completely taken off. But of course, the stakeholder involved in this game would actually feel very hot. So the whole option, the option available to a lot, it includes quite a couple of issues. You remember, one of the key things that the government did then in 2006 was to introduce the ICDs. And that helped to a large extent to remove that. But then there was this lingering problem. What's going to happen to the ICDs when the concessionaires come in? Because concessionaires will naturally want to have as many containers as possible. But then they worked really hard to accommodate some of them, and some went under. But clearly, therefore, those ICDs who set up these businesses were actually hot. So you'll notice there are a lot of stakeholders involved in this whole game that needs to come together and discuss essentially the strategies to adopt to try to really take away most of these problems and thereby eliminate the thing of surcharge. First is simply that the trucking industry, generally speaking now, the cost of movement from the port or into the port has gone up astronomically. And that is not really what the economy really wants now. So that's really pushing up the cost of imported products and so on and so forth, and even exports. So it makes us completely uncompetitive. So everybody needs to come together and then explore the strategies that naturally should be adopted to try and sort out this problem. And there are a couple of strategies that we're going to be looking at.
So what basically is the outlook for this sector now, given this surcharges that you've talked about? We have a lot of tank farms, over 60 tank farms, and that axis of the constituting gridlock now to exports and imports.
Yeah. One interesting feature here about the tank farm is simply that initially we used to have two major access to the port. The road from the Apapa end, that's from the creek, the road from the Western Avenue down to, from Ikorodu Western Avenue down to Apapa, and then the other one moving from the Maitu axis, also the Maitu axis. Now, with those two lines working, it was really manageable to accommodate the tank farms that are actually positioned on this on the sides of the port. So they could come in based on time window arrangements or some appointments to move things. So we didn't quite feel this. Now, one of these roads went bad. And then the only one remaining, the government, is the joint venture activity between the MPA, Flour Mill, and Dangote. They're working on it. Sectors, right? So we are actually reducing the number of the capacity of the road to the port. So that meant nothing much will come out, those that are coming in to carry to lift the petroleum products will also be hot. So essentially, you're going to go into some kind of time window arrangements.
We really need to go because we're running out of time. Yeah. Dr. Frank Ojadi, thank you so much for your attention here. Thanks for your thoughts sharing here. Yeah. It's back to you now, Bosun.
Thank you, Temple Ashaju. Thank you very much for that. Bringing us up to speed with Dr. Ojadi on the state of the shipping sector. Temple will be back later on the program to take us through some of the earnings and market headline news that we have at the moment. But let's come back after the break. We'll look at the commodities markets and a bit later the Nigeria banking industry as we see those earnings coming through from GT Bank, of course, 2 days ago, UBA.